All right, in this video, what I want to talk about are the things that you should never disclose to a lender if you're trying to refinance property or actually purchase real estate in a limited liability company. I can tell you this because I've been using LLCs to buy real estate for years and I've dealt with lenders on it. And there are some mistakes that are going to trip you up. And by watching this video, I'm going to teach you those things that you should avoid to ensure you don't run into the same problems I've run into before when I've been using my limited liability company with real estate. Okay, let's get started. So here's the deal. When you're buying real estate, or if you have real estate and you want to work with a lender, there's a number of things that they're going to be looking for with respect to that LLC if you intend to use it in a transaction. Now, generally speaking, what we find is a lot of the structures that I set up for our clients here at Anderson, what we're going to do is we're going to create a limited liability company, and we'll oftentimes have that held down here by a Wyoming LLC for privacy purposes. So this is the entity where you're going to be either buying the house or you currently hold the property in this limited liability company and you're seeking to refi that property. So what are some of the things then that you need to look out for when it comes to dealing with lenders and closing on property inside of an LLC? Well, generally speaking, this type of setup right here, it's fine that you set it up that way, but when it comes to getting a loan, the first thing I like to do is fix my operating agreement. So you want to make sure that you're providing a clean operating agreement to the lender. Now, what does that mean when I say a clean operating agreement? Well, when they ask for a copy of this LLC's operating agreement, what you don't want them to see is this Wyoming LLC. And so oftentimes what I will do is I will enter into what I call a restatement. All right, so I will restate this LLC operating agreement, meaning if you looked at it prior to obtaining a loan on this property, what you would find is that the member of the LLC is going to be listed as the Wyoming LLC. So that information will be listed on that LLC operating agreement. Now, I don't want that, because when the lender looks here, they see here, then they're going to have a bunch more questions for me. It's going to complicate it. It's going to go into underwriting with the attorneys and legal, and they all get involved. So what I'm going to do is I'm going to restate it. And what that means is I'm going to change this operating agreement to basically wipe out this Wyoming LLC. I'm not going to have it show up anywhere on there, and I'm going to have myself listed as the member of this LLC. So when I'm dealing with the lender, I'm going to present them an operating agreement where my name appears as the member. Now, if your LLC was set up as a manager-managed LLC, well, then of course you're also going to be listed as the manager. And quite possibly, depending on your operating agreement, you may even list yourself as a president as well. So there's different ways of completing this operating agreement depending on how it was set up, on the information you want to provide to that lender. So when they look at this company, they don't know about the Wyoming LLC. And that many times is a mistake that I've seen happen time and time again, where people pack LLCs like I'm talking about for anonymity, but it just doesn't lend well on the other side when you're looking to borrow, because they don't know who the ultimate borrower is going to be. Now, another problem that can come up in an LLC of this nature when you're dealing with lenders is, let's assume that we have a couple of people here that are looking to do maybe a joint venture together. So you got two of you sitting on here and you want to do this deal inside of the LLC with that property. Now, in this case, you have to look at who's going to go on the loan, all right? Who's going to give the guarantee? Whose credit are they going to run? Who's going to have to sign off on those docs? Generally speaking, anyone that has more than a 15% interest is going to get scrutinized by the lender. That means they're going to run their credit. They're going to have to sign off on the loan, and most likely it's going to be a recourse note back to them. So what I will do in those situations, let's say I was buying this with my partner, Toby Mathis. We're going to buy a deal together. We will choose one of us to go on the operating agreement. So the other one will be taken off completely before we apply for the loan. Or what we'll do is this, we'll leave myself on there and I'll have a 1% interest, some minimal de minimis interest, so that when the operating agreement is submitted to underwriting, they would see, here's my partner with 99% interest, Clint with a 1% interest. I don't have to fill out anything. They're not going to run my credit. They're going to keep me off completely. He'll be listed as the manager of this LLC. So we'll do that for refinancing, for getting financing to buy a new purchase. And then after the deal is done, of course, I'll be brought back in. If I'm supposed to have 50%, I'll be brought up to 50%. And he'll have his 50%, and I'll get listed up here as a manager as well. So we'll go back and we'll change that operating agreement to reinstate me to the position that they wanted me in. So that's something you need to look out for. The third thing you should do when you're dealing with LLCs and applying for loans, let's say you're not with a business partner, but you're with a spouse. Remember that when you're using or you're applying for loans, if it's any type of Freddie Fannie product that you're looking to get a loan in, it's a good idea not to have both spouses involved in that loan. So generally speaking, if it's a residential mortgage, and that's what we're talking about here, you're not going to be able to obtain a loan in an LLC. So don't even attempt it to try to get that loan in that limited liability company. But if you are looking to get a loan and you happen to be married, and here's the house, so we're going to get a loan to buy this investment property here, and we want to use that Freddie Fannie, those qualifying mortgages to get those lower interest rates, only put one spouse on there to qualify. Now, I've talked about this in my other videos about the importance of it. Sometimes it gets lost in the translation that, by putting one spouse on there rather than both spouses, what you're doing is you're ensuring that you can still qualify for that 10 loan limit, meaning one spouse can buy up to 10 properties with Freddie Fannie financing, and then my spouse, she also can get 10 properties. Once you've closed on the deal and you've got the financing complete, you can always put that LLC or that property back into your limited liability company. So I give you a couple things there on what you shouldn't disclose to a lender. And basically what it comes down to is we want to make sure that we can get through the underwriting process the quickest way possible without creating a lot of hiccups and possibly pushing back our closing deadline, asking the seller for extensions on that deal because of the way the operating agreement was set up. Hey guys, if you liked the video, be sure to hit the like button. Take care.